assessment. Working capital is rather a big strength of these packages. Looking to the side selection panel and enter relevant details as for current assets, current liabilities. At third screen, state DP for each category of current assets. Calculate DP as per method 1 or method 2. If your project is getting stabilized in second year or third year, then which year margin to transfer to cost of project. Then choice for bank finance as per DP method, turnover method, or as per your own given rounded amount of CC limit. At fourth screen, opt for detailed working on interest charges on working capital limits as separately for each of the sub-limit and as differing sub-limit utilization percentages as separately for first year, second year and third year onwards. All this would enable you to work out precisely your interest charges on working capital. At last screen, if deferred sale is involved, then state the details as how it will be realized over future years. After this overview, we get into the details for current assets. As said, we shall have a first look to the status of previous year. It is a very helpful and greatly assisting feature. Here, we are made known of the holding structure for all categories of current assets, including all inventories and receivables type as evidenced during the last 3 years. We could see that WIP is in the range of 10 days, finished goods at 0.40 month, domestic receivables in the range of 3 months. Same way, look to the holding of raw material, advance to supplier, etc. Taking a clue and guide here from, very simply, just enter the holding structure as required for all these as raw material imported, raw material indigenous, WIP, finished goods, domestic receivables, export receivables, advance to suppliers, etc. Very importantly, you could specify stocking and term credit period as separately for first year, second year and third year onwards, bringing in lot of flexibility and adaptability for the very precise and detailed assessment of working capital. It also provides generously for other specified user-defined miscellaneous current assets and miscellaneous current liabilities under lot many 8 different heads. As for current liabilities as well, take a clue on its previous behavior and then give the relevant data input as to various creditors level as separately for first year, second year and third year onwards. Further, as current liabilities, you may have taxation and dividend with 100% paid or payable status or any combination thereto. Same way like current assets, it provides for lot many user-defined categories for other current liabilities. At third screen, state and decide on DP percentage as separately for each category of current assets. Say you are having government receivables and want DP at 75% instead of 60%, export receivables at 90% and so on. Then by the right side, your request for bank finance may be rounded to certain amount, say 200 lakhs or so as separately for each year. Thus, having a complete flexibility and adaptability for every income element and cost element as leveled down to each of the year position and having a full-fledged facility to specify varying and different holding structure as per first, second and third year onwards would surely enable you to get the working capital assessment and margin money of working capital as the way you want it and intended for.